Hi, everybody, and welcome to today's panel, a panel that I'm really excited to be talking to you here today about, and one that will be extremely important as we start to see things emerge at COP26, but more importantly, what we see emerge after COP26 when we look at starting to implement the, hopefully what we'll see in terms of government commitments as they come out as the days pass. I'm here today with a bunch of extremely incredible speakers. They're going to give us some real insights as to what's happening in a region of the world that I think will become increasingly important as we respond to the overall issue of climate change, but more importantly, how we grease the wheels of getting action and really focus on this context as we've heard a lot talking about over the last few days on the decade of action. And what will be really important is the role that Asia plays in that. Today in particular, I'm going to focus a lot on hearing from the panel on the flows of capital, where those capitals are going to go, how we're going to recognize that within Asia. Is it all going to be Asia supporting Asia? Are we going to see international investment come into our region? Or are we even going to see Asian capital actually go outside of our region? And that's something that we'll talk through a bit today, as well as the mechanisms and infrastructure that we're going to need from organizations like the SGX and so on to actually facilitate these flows of capital and support businesses in our region to be successful for now, in the medium term, but as importantly in the long term as well. So enough from me. I'm going to start off, if it's okay with you, Piyush, to ask you perhaps the first question. So how do you see DBS and the capital mobilizing for DBS in support of the decarbonisation agenda across Asia? And is it focused on the transition in the region? Are you looking to support that as part of the process for you at DBS?
Thanks, Matt. I guess let me first frame that answer in the context of what is happening in Asia. There's an argument, of course, that Asia's progress is what is technically called highly insufficient relative to the Paris requirements. But that's the glass half full, the glass half empty. The glass half full view would say that even in the last few years, there is a lot of traction happening in Asia. Countries like Korea and Japan have made net zero commitments. China has said peak emissions by 2030, net zero by 2060. 3,000 companies in Asia have signed up for TCFD. That's about 30% of all companies who have signed up for TCFD. And there is a pickup, therefore, in the nature of green finance, green loans, green bonds, sustainability-linked bonds, etc. In fact, this year, in the first half of the year, I think total green bonds or ESG bonds in Asia were more than all of 2020. And the interesting thing was there was not a significant amount of greenium being paid, and therefore these bonds are coming in at a reasonably decent price. So that's the context. In that context, we're finding at DBS that our agenda, which is twofold, is working really well. The first part of our agenda is really thinking about what we do less of. And there, like everybody, we've made some clear choices about sectors that we think are carbon inefficient. And so we're cutting back on our support of financing for those sectors. Thermal coal is an obvious case in point. But perhaps more germane to your question, we're equally focused on things we can do more of. And in the more of category, there are really two broad subsets. One is the subset of doing more green loans, green bonds, and sustainability-linked financing. We've done a commitment of doing about 25 billion of that by this year. We realize the demand is so huge that we're far outstripping that. We've already got 5 billion in green loans, 5 billion in sustainability, 10 billion in linked financing. So we upped our commitment to $50 billion to support these kinds of activities over the next 3 years. But the other thing that we're doing, the other subset, is we've done a lot of work around trying to define transition financing, which really is going to be the big enchilada here. How do you help companies go from brown to light brown, from light brown to light green and to dark green? What are transition pathways you find acceptable? And how do you consult with companies and help them to go from one category to another category? So we're focusing on 8 mega industries where we think this transition finance will be critical. Energy is one, the built environment is another, automobiles is a third, for example. And we're actively now beginning to work with clients to help them through this kind of transition financing. I think, frankly, this is going to be a very significant financing opportunity for the banking system over the next several years to come. And we're deeply involved with this as we speak.
So maybe, Alvin, if you want to respond, this concept of moving from brown to dark green that Piyush talked about, do you think the fundamentals are in place to support the significant flow of capital in Asia that we're going to need in order to achieve that transition?
Yeah, thanks, Matt. So we do see the forces are aligned at the moment to support that. And of course, a lot more work needs to be done. Our vantage point is from two different perspectives. At IHS Markit, we spend roughly half our time with the financial sector and the other half with some key corporate sectors, in particular energy, natural resources, and also transport. So in these two realms, we see, of course, in the financial sector, as Piyush discussed, a lot of activity to support their clients to transition, and of course, that's over the long haul. On the corporate sector, we see companies in Asia starting to research a number of different initiatives that will help them, especially carbon capture, getting more active in renewables, the hydrogen economy, et cetera. And likewise in the transport, various ways to decarbonize and transitioning to more work in the electric vehicle value chain, things like that. So that's what we see for financing and the corporate side. In terms of government support, again, if you march through Asia, you see many initiatives that are supportive of this carbon market growth and these initiatives. So for example, of course, we have China being a huge carbon market that's now launched, but we see a number of other initiatives as well. We have long established but smaller initiatives in South Korea, New Zealand, and then we have up and coming pilots for compliance markets that we see. Places like Indonesia, announcements have been made in Vietnam. Then we see some interesting transactions which are government to government. So this has been going on for some years, but one of the more recent ones that I noticed was between government of Switzerland and government of Thailand, where there's cooperation to support projects in Thailand, and that would allow Switzerland to offset. That's just one example, but I think post COP26, where the mechanisms are further worked out for that, we ought to see more such transactions. And of course, that will support growth of this market in Asia. And then finally, if you go country by country, numerous things happening, which I think are supportive of this growth. So of course, in Singapore, the government's very supportive. There has been a carbon tax that's being reviewed. There's initiatives supported by DBS and SGX on carbon trading. And then you see other countries trying to, I guess, unleash similar things, but perhaps more focused on their individual market. So we see, for example, forest ministries in various of the Southeast Asian countries trying to see how they can organize themselves to sell credits. So that will bring in necessary capital to fund all of their various projects, but also hopefully unleash some projects that can be available for local corporates to take advantage of, and eventually international as well. So these are the things that we're seeing happening. A lot of this, of course, will be further improved if we see a steady appreciation of carbon pricing. So while we do see all these projects, even at the levels that we observe today, it would be, of course, substantially better if the price gets to $50 or even $100 a ton. Based on all the research and stats that we've seen, that would unleash an enormous number of projects in Asia Pacific.
Right.
Matt, if I can jump in, there's some fundamentals which I think are not just an Asia challenge. They are still a global challenge, and hopefully the COP will address some of these. But quite clearly, the question of taxonomy and measurement is still unresolved. It's like an alphabet soup. There are hundreds of different people who have different views on what you measure, what you count, and what is the right taxonomy and what are acceptable transition pathways. And if you don't have clarity around that, it makes it very difficult for capital to come in and play a role, because capital does not know what is acceptable and what is kosher. So we do need to resolve that, but that's a global challenge. Second in Asia is carbon pricing. I think Alvin correctly referred to the fact that they're good in early attempts, but it's not consistent. So Indonesia is talking about a $2 price. Singapore has a small $5 thing. The best highest, I think, in Asia is Korea at about $33. But until you start getting a consistent way of pricing for carbon, it's difficult for capital to flow in, and because capital is seeking a return. So I think that will continue to be somewhat challenging. I think the complementarity of figuring out how to address the compliance markets along with the voluntary carbon markets and trying to figure that out, Article 6 issues, I think that's again a global challenge, but particularly relevant in Asia. I think the flow of capital in the public sector, the famous $100 billion per annum committed from the developed to the developing world, we're not seeing that flow through in any significant measure. And so finally, we're going to have to rely a lot on an infrastructure that supports private capital, crowding in private capital. And so to that extent, voluntary carbon markets could be really important, given the number of companies who are making net zero commitments. I think it's a place to go, but it's very early days.
Yeah, agreed. I mean, Boon-Chye, as the CEO of one of Asia's most trusted exchanges, Piyush has talked about getting some trust into the market in order to deliver that, as well as this discussion about the compliance markets and the voluntary markets. What's your sense of the dynamics that you see from SGX perspective in terms of what's happening?
Thank you, Matt. And Piyush made some very good points, whether the challenges around taxonomy or not. Let me answer that question through the different roles that exchanges can play. And indeed, exchanges do have a unique position at the center of the market ecosystem. So for us at SGX, we see our role in 4 different lenses: a key player in the ecosystem as a company, a business, and as a regulator of listed companies. So on the point that Piyush mentioned on taxonomy, we did a consultation recently on making climate reporting mandatory for our listed companies. We ourselves, while we all like to have a standardized taxonomy, I think it's hard to get the global system going on that. We ourselves are going to mandate our companies to start reporting climate risks based on TCFD, and also creating data portal to help our companies on key metric to disclose, so that you can help investors with easy to access, transparent information, and in there, hopefully, they could make the right decisions. We have also released and helped companies with a guide on credible decarbonization and transition. And key in that is there's no small step to take. We all have to start to measure the carbon footprint, set targets, reduce emissions, and then that's where also carbon markets should come in, where you could help to neutralize unavoidable residual emission. And then companies just have to compensate that year on year and then disclose progress. Yeah,
great. Thanks, Boon-Chye. So Piyush, I've got a question for you then. Boon-Chye's talked about TCFD and raised that as a one of the standards in which, around the world, we're starting to see aggregation around as one of the key frameworks to disclose climate risk and opportunities. At DBS, are you starting to see that being used as a framework, though, to assess things like credit risk, things like investment risk, these types of things, and ingraining that into the processes that you've got that will actually help you determine where to place capital in the future?
Well, the short answer is yes, Matt, but it's a more complex answer. So in the first instance, we've been reporting on TCFD now for the last 2-3 years. And I'll be the first to admit that, I can blow holes into our own reporting. And the reason for that is that it is very hard because of what I said before. There is no consistency. In the case of publicly listed companies, we just take their disclosures, and it's not an audited disclosure. We just accept what the company says, and we sort of aggregate it and report it. In the case of non-public listed companies where there's no requirement and it's not disclosed, then you got to start trying to figure either estimations or work with the company to try and figure what is likely to have been the carbon footprint. And when you get to the small and medium enterprise sector, the problem gets massively compounded because, frankly, in many of the cases, this is not even a priority for them. And therefore, because a large part of Asia is still family-dominated, family companies, not publicly listed, there's quite clearly 50% of the corporate sector, you really don't get your hands on good quality data. So that is genuinely an issue. Now, that having been said, what we have been doing in addition to the reporting challenge is really trying to make this thinking in use. So we put this into our credit process and our capital allocation decision-making to an extent. What does it to an extent mean? We've identified 8 sectors. In those 8 sectors, we published very specific risk management guides. And these are obviously the heavy carbon sectors. And we've created a set of do's and don'ts for our relationship managers and our credit people. These are the questions you need to ask. This is what you need to be comfortable with. And you got to start thinking about the risk dimensions, both in terms of transition risk and physical risk. Now, to be fair, some of these, like I said, we still don't have all the answers. So you take physical risk, for example. It's okay for me to say, okay, there's a possibility of sea levels in Singapore rising by a meter in the next 30, 50 years. But then, therefore what? Should we therefore stop financing local housing and mortgages along the coastline? That might not be a smart thing to do, because I don't know what the government is going to do in the meantime. And I don't know whether I would be precipitate by stopping financing housing for the disadvantaged people today. So we have put this in practice. We address the questions in our risk analysis, but do we then finally take the actions to say stop financing, add financing, and allocate capital? The honest answer is not entirely. So we use it, we are informed, but then we still have to make judgmental calls on what is the best course of action to take in a particular situation.
Right, that makes sense. And so, Alvin, maybe as an information provider, do you find that the information that you can extract, you can get what you need in order to support organizations like DBS or SGX in making those investment decisions or market-based decisions? Is the information there, or have we still got a long way to go?
The infrastructure is in place to have more and more data flow in. So what I mean by that is one of the things that we work on is something called ESG reporting repository. So it is meant for various entities, in particular exchanges, but it can be used by large institutional investors as well. And what we have is the ability to ingest sustainability reports from large corporates. Of course, not every corporate can create a rich report like that. So we're also building interfaces for the investor or for the exchange so that companies with fewer resources or various challenges, they can input some of the data in there and at least get some of the data flowing. Piyush mentioned about difficulty to verify, and that's of course a recognized challenge. So we're also including workflows where as the data flows in, we can have connectivity to various third-party verification firms that can help in that process. So that's something that we see that will be increasingly important. For private companies, that also is a challenge. We see some government support where they're trying to use similar infrastructure to unleash data to flow from the private companies. And we also see people like PE firms or other large entities that have a large allocation to private assets. They're setting up the infrastructure where they can send out these questionnaires to those private companies, collect the data, and then manage it. But again, of course, the data quality probably, it will have to be iteratively improved, as with many things. And so that's what we're working on and what we see in the marketplace.
Great. So just in the last few minutes that we've got, I'm really interested to hear from each of you. Maybe I'll start with you, Boon-Chye. We feel like there is momentum occurring in this in the climate space in particular, but even more broadly around ESG. I think most of us would agree that the last 80 months has really seen a ramp up in relation to that. Is that trajectory likely to continue? Are we actually, is this is it a phenomena? Is it a fad? What is it in terms of this ESG and climate scenario? And where do you see it taking off into the next sort of 3 to 5 years, Boon-Chye?
Well, I think it's definitely real, but let's also not forget that things don't move in a straight line. We're going to get a digression along the way, but I think we're moving in the right path. But also, at least from the regional standpoint, recognize that Asia is very diverse. Countries and industries span the entire spectrum of the journey. And I think it's important for Asia to balance credible and holistic transition with what is needed in the region because of the very diverse economic, environmental, and social needs. So I think we are on the path where everybody can make an impact, and for the scalable impact, all stakeholders, whether public or private, will have to work closely together. And that involves obviously enhancing policies, data, taxonomy, as talked about, and not forgetting technology. And I think if you ask me 5 years, 10 years from now, I think we'll be in a better position than today, but not quite to where we need to for 2015 or whenever net zero that's been made out by many countries.
Matt,
Thank you,
in
Boon-Chye.
the few minutes
Piyush.
which you want me to speak, let me actually talk
Please.
about a subject which is quite important. Something Boon-Chye and I worked on together as part of Singapore's Emerging Stronger Task Force. And that was this whole question of trying to scale the voluntary carbon markets. Now it's quite clear that the principal agenda is to change business systems and try to get to more carbon efficient business models. But it is equally clear that it's going to take a lot of time and a lot of money. And there are quite clearly some sectors which are hard to abate. And therefore, we were of the view that carbon credits and carbon offset markets are going to have to play a really important role in trying to get to net zero and achieving commitments. If you accept that, then the next thing you realize is that Asia is going to be a really important source of generating those carbon credits. The single biggest source of carbon credits is nature-based solutions, natural climate solutions, NCS. And Asia actually, in Indonesia, Southeast Asia, Cambodia, even South India, has about 30–35% of the world's total possible NCS resources. And therefore, one of the things that Asia will play a very critical role with over the next 3–5 years is to see how we can actually use these natural climate solutions to create corresponding carbon credits for private sector around the world to participate in. And if you can get this right, this to your original question, will start crowding in private investment. The 100 billion in the public sector, which are not flowing, multiple times of that can flow in from private investment into specific projects in Southeast Asia, which are carbon capture projects. And that would be a fantastic thing to be able to get. So between us, SGX, DBS, Standard Chartered Temasek, we jointly got together and launched something called the Climate Impact X, which is an exchange which is focused on trying to create these flows and trying to make these flows happen. Now, of course, for these flows to happen, you need to make sure that the projects themselves are high standard. They hit the carbon, core carbon principles, the high quality, they're verified. And so we're trying to do that, get a really high standard, but fundamentally get the capital flow to start happening, because that will make a big difference in the next 3–5 years.
Yeah, great. And look, I'm very much looking forward to being part of the journey with IHS, with DBS and with SGX as we look to make those goals a reality for us in Asia and ensure that the engine of the world or the globe, the capital engine of the globe continues to be successful. So thank you so much to each of my panelists. It's been a great discussion, and I look forward to hearing more from you over the next 3 to 5 years. So thanks everyone, and bye for now.
Cheers.
Thank you.
Thank you.